This is not financial nor professional advice. This video is for entertainment only. Hey everyone, wild times in a wild bear market.
Somebody help me!
And I will repeat, I gotta remember not to feed the bears.
I feel like I'm taking crazy pills!
Because that's all you're doing with these rallies. You know, Apple, we got word on Thursday that Apple beat earnings by a massive amount. They killed it. They did really good. And this sounds like so much good news. And people are going to jump in and maybe you're going to get some buyers on this. It's over. My God, Apple is doing great. You know what this means for sure? There's no chance that they're not going to raise interest rates. They don't care about the stock market nearly as much as they do the broad economy, because most people really don't have that much in stocks. It's mostly the value of their houses. It's mostly their daily expenses, energy and food, which are so important. So I think the Fed's actually going to take this as, yeah, we can raise interest rates. They're making boatloads of money. And now the economy hasn't shifted into recession yet. Well, you can predict that Apple's going to make less in the future quarter if we go into a recession. They all will make less. But then there's the other argument that the reason their earnings were so good might have been because as the flu got worse and people were staying home more for a while, either recovering their health and getting better. So that's possible that it was kind of a return to the stay-at-home movement for a while. But we're anticipating that the health of the country is going to get better. So that's probably going to be less of an effect. And the amount of inflation and interest rates. And the paradoxical thing is, when you increase interest rates, in a way, you're kind of making inflation worse in a way for those companies borrowing money. Now, I've been trading FNGD, and that went up 5% today. And you know how these end the day almost is meaningless. They vary so much during the day that I'm trading in and out of them on the day and making money on intraday trades. It's not so much a day trader as an hour trader. And mostly what it is when people or brokerages, especially the big brokerages and the big companies, decide to short, they put the shorts on, and then they look at the pattern. Look, we've made pretty good money. You make 5% in a day. That's probably what you're going to do for the day. And you take it off and you get out and you go home and you're happy. So basically, you're just riding. It's like a bear riding a surfboard, if you can picture that. It's kind of hard to picture, actually. Maybe it's more like a bear on thin ice, trying not to fall through the ice. Maybe that's a little better metaphor. But Apple will probably encourage people. So probably tomorrow, it's going to go up in the morning, and then the shorters are going to say, yeah, interest rates are going up for sure. Apple, these companies reporting good earnings, and especially the big companies, the interest rates won't affect as much simply because they don't have as much need to borrow money as smaller companies. And so I've been doing the SQQQ, which is shorting, which is an inverse fund on the top 100 companies on the NASDAQ. And Apple makes up about 12%. Microsoft makes about 8% of that. About 50% of it is smaller companies. So you get more of the companies affected. They will be affected by higher interest rates. The SQQQs. So, but I think both of these will do well, the FNGD and the SQQQ. but you got to ride the waves. You're surfing, man. You're just surfing the waves, and you get on one of these bear rides where everybody, and this can be individuals or people like me doing inverse funds. We just ride the wave, and then we enough is enough, and you got to get off, and you have to know when enough is enough, and you should have that preset in your mind. But it turns out that the really good one to short, and I've been hesitant to do this, but I think I may mainly short this company tomorrow, and that's SRTY. I call it Sorty, SRTY. That was up 7% today, and it's because it's a triple leverage inverse fund on the Russell 2000, and that was up 7% today. So that did really well. There are other funds that are doing well. Another one I'm thinking of shorting is SOX, SOXS, and that was up 14% today, SOXS. So the semiconductor, I don't think they can provide as many semiconductors as they want, that there's supply chain problems because of the flu throughout the world. And that's probably the reason it's going up. There's a shortage of them. If you're a semiconductor company, you can sell as many as you can get over here. Let's put it that way. So SOXS, I will probably be mainly shorting SRTY and SOXS tomorrow. Another fund that I'd look at, but I can't bring myself to short because I love biotechnology, is LABD. And this is a triple inverse fund of the biotechnology sector. And I can't bring myself to short it. If I was purely after money, I would be shorting it because it went up 14% today. And previous days, going back almost a week, it's gone up typically about 5% a day, almost around there. So that's been going wild. Up 14% today. I can't believe it. It had already gone up so much before that point, and for that to do that again is just unbelievable. There are other interesting things going on in the market. Aluminum is doing surprisingly well, although they did go down 4.5% today. But they were having some good days of going up. So I'm not recommending any of this to anybody simply because this is risky and dangerous. And unless you're used to doing it, I don't recommend it to anybody. I'm just telling you what I'm doing. AA, which is aluminum basically, it is going to do well. And it's going to do well because Tesla keeps making their cars out of space age materials, which is different alloys of aluminum mixed with other minerals like manganese and copper. And they actually get that shell stronger than the average car. So you got space age materials when you're driving a Tesla. But Tesla, it's got a great future, but now is not the time for long-term investing. Now is the time to make money on other things somehow, some way, or just stay out of the market. Staying out of the market is fine right now. It's probably the advisable course. Just stay out of it. But you're going to be able to buy Tesla at a bargain price, it looks like. Today, Tesla dropped 108 points to around 830. Wow. Okay. Tesla goes on runs, but even for Tesla, 108 is noticeable. And after it went down 108 points, it recovered 10 points to 840 in the after hours, the beginning of the after hours. God knows what's going to happen next. But I think I would, if you're not in the market and you're standing on the sidelines, I would stand there for a month or two, probably a month, uh, at least until after he announces the rate increases or how bad inflation is going. This is all a moving thing. We got to be moving right with it, you know. So you're going to get a bargain on Tesla, and I will buy it. I will buy a boatload if the price gets ridiculously low. But right now, tomorrow, I'm going to do Sorty, SRTY, and I'm going to do socks, SOXS. So, like my mother told me, I'm going to remember my shorts and to put my socks on. I think I said that right. I will see you in the future. Take it easy. Good luck in your investing. Thanks for listening.